Hey, what's up, guys? This is Dan, your former financial advisor. So I've been getting a few emails from some of the viewers about success in the financial industry. So right now, a lot of people are running into problems with their clients, with closing the deal. The problems we're seeing right now is that CD rates are 4%. 4% guaranteed rate. It's so hard to get people to take on risk in this environment. Annuities, fixed annuities, I mentioned that in a previous video, they're paying about the same. So a lot of people are just sitting on cash right now. So I thought of a few things, a few ideas to help you close the deal for these clients, and a few talking points that really make sense and should really help you get the deals closed. So remember, guys, when you're talking to clients, obviously it's about appearance and delivery. You have to be confident when you're saying these things. You have to know what you're talking about. So right now, if a client comes to you with $100,000, $250,000, and when I was at the bank, usually I saw most people had $100,000 to work with. They really did. So why not put $100,000 in cash? Why not? So a few rebuttals you would have. And I actually put together a rebuttal list of what I used when I was a financial advisor. It's in the description below, so make sure to click on that after the video. But a few rebuttals I'd have is, look, Mr. and Mrs. Client, I know right now you can get 4% on your CDs. I get it, and you should. You should put money in there. But from what we talked about when we first sat down, we're long-term investors. Over the last 25 years, the S&P has returned on average 10%. That's definitely going to outpace any CD you'll ever see. Inflation's slowly coming down, and once it does come back down to a normal rate, these CD rates aren't going to be where they are. Remember, just a few months, and especially a few years ago, everyone was complaining about how low the cash was, how low CD rates and cash savings accounts were paying. But now we have the opposite going on, but this isn't going to last forever. So let's put some of your money in a guaranteed CD, but let's also max out your retirement accounts. Right now, the stock market, last year it was down 20%. Right now, the market is cheap compared to where it was. Let's take advantage of this dip. So we'll take advantage of both the high CD rates and the 20% decline in the market. Now is the time to get in and hold it for the long term. If you're worried about the volatility, we can at least just max out your IRAs. So the short-term volatility won't really matter because you're going to be using that for retirement. And as you get closer to retirement, we'll turn down the volatility in your IRAs as well. So today, we'll do both, some guaranteed, and we'll take advantage of the 20% decline we saw last year in the stock market. And then stop talking. Listen to what the client's going to say. Listen to them. They're probably going to look at each other. Okay, yeah, that makes sense. Let's just max out the IRA. If that's all you can do, then do it. It's better than nothing. Set them up on a reoccurring monthly. What's the max for the IRA this year? 6, 7 grand? I don't know. Divide that by 12. Get them going. If they're short, make a deposit and then get the recurring going if they haven't started at the beginning of the year. But get that recurring going month after month in both the husband and the wife's account. What we really should be doing is getting, if they have 100 grand, 50% in CDs, 50% in a mutual fund. Get that A share up front and then a small trail coming in. But the talking points are, go over the historical data. Past returns aren't indicative of future results. We know that. But go over history with them. Look, we've had about 10% a year these last 25 years. Rates aren't going to stay like this forever. Inflation isn't going to stay like this forever. Let's get some growth going for you. And then repeat their goals. When you first profiled them, you said you wanted to retire at 65. You said you wanted a cabin in the woods. Well, 4% after inflation isn't going to get you there. You need some growth. So even though inflation isn't going to stay like this forever, right now it's about 6.5%. So your 4% is great, but inflation wipes it away. So it's pointless. It's just a feel good. It feels good to have 4%, but after inflation, it's nothing. And taxes as well. You have to explain this to them. Inflation's going to wipe out their profit. Get in the market. The market's on sale. Buy shares right now. It's on sale. The past 25 years, it's basically outpaced inflation. CDs haven't done that. Now is the time to buy. Get in. Say all of those talking points. Memorize them, get them in your head, write them down, go over them. Obviously, don't have the paper out that you wrote down when your clients are there, but make sure you have these memorized. Go over them. This is how you'll close the deal. All right, best of luck. Anything further, make sure to email me below. I am available for more detailed conversations for a one-on-one consultation at a very reasonable fee. Thanks a lot, guys.